Hey there traders, it's Jeff from thestockbandit.com. Thanks for joining me for this video. So as we do every week, as we head into a brand new week of trading, we got to stop and take a look back at where we've been and what are the current conditions for the indices. That's what's going to have the biggest impact on how individual stocks move. Well, last week, if you joined me for the index review, you know that I pointed out several important levels. I pointed out this 30-40 level that we had just ended the previous week on. That was a support zone. I said the bulls need to make a stand there. But if they do, on the way back up, we need to watch this 3100. And if we do happen to break this 30-40, the next level is going to be this 3000 level. Well, last week we tested all of those and we validated every single one of those levels. Now, I don't have a crystal ball. I'm just a guy paying attention to the price action. You can do the same thing. I teach all this stuff in the courses. You know, it's not that difficult, but you do have to pay close attention, and it's kind of an art form. You got to practice it. You got to improve. It's a skill, reading charts and understanding where the levels are. So right now, here's where we are. We held this 30-40 early in the week. We rallied up to 3100. We actually got slightly through there, but we couldn't hold above it. And on the close, we got just 4 points above that on Wednesday. But there was a little bit of doubt creeping in as that day we closed off the high, and then on Thursday, of course, we started to move lower. Friday, we broke down really hard. We undercut this 30-40. We hardly paused there intraday before we got through there. You know, that was about just after 11 a.m. Eastern, and then we sold off hard. The rest of the day came right down. Look at the low of the week, 3,000, and we finished at 3,005. So we got only a minor bounce off the low of 5 points on Friday, and here we are testing another very important level, and we did so with this expanding volume throughout the week. We saw very heavy volume on Thursday, Friday. Now, it was option expiration week, and that definitely plays a role. But as a technician, you're looking at these wide-ranging bars here and this nasty turn lower from a key level that broke some support and is now right at leaning on support on heavy volume, and this is not a good thing for bulls. Throw into the mix the fact that we've already gotten some lower highs here. We've also got lower lows here, and what we've got here is a near-term downtrend. This market is in correction mode. Now, is this going to lead to some all-out breakdown and just a nasty, disgusting correction in the market? I don't know, nor do I care. As a trader, I've got to formulate if-then scenarios. And right now, if we break 3,000, that's another indication to me that cash should be raised further, or the short side should be embraced a little bit more. Now, does that mean immediately? So if we break down through 3,000, that means I short everything in sight on Monday? No, not at all. It means, obviously, we've just sold off here about 100 points in 2 days. That's a lot. We don't want to just ignore that. So we may need to just pay close attention to how the bounces unfold from here. They're most likely going to be met with some selling now that we've really confirmed two real lower highs here in the NASDAQ. So pay very close attention here. If you haven't been raising cash, you ought to be, because if we do break down further, it could get really ugly here, and it hasn't yet. We're not down that far. In fact, you take a look at how far we've come here in the last few weeks. The NASDAQ's given up 5.5%. That's not that much. That's really not bad at all. So it could get much uglier than that. Keep in mind, last summer we saw the S&P 500 give up double-digit declines in a relatively short period of time, and then we've only seen the NASDAQ, which tends to move much slower than the S&P, give up half of that. So there's plenty of room here for downside if this selling happens to pick up the pace. But for now, it's just another reminder to be very careful out there. For the S&P 500, saw this index move back down to the low end of its range. That's right here at 1426. We got within 10 points of this upper end of the range. That's 1474. So we're in about a 50-point range here. And if we break down, maybe that takes us down to this 1375 area. That'd be kind of that measured move there. And we've got room to get down there. I would also point out this note this level right in here, about 1395. That's this level right in here, and you can see that that's been an important level late this summer and then early in the fall. So if we do happen to break down for the S&P, which it's still holding in its range right now, but we saw a nasty turn lower on Friday and heavy volume. If we do break down, we've got room to run further there. For the Dow, this index is right at 13.3. We're 43 points above that. That's nothing. And this index is, really got the opportunity to break down about 350 points if it leaves this range to the downside. So really the first stop would be probably right in here, about 12,980. That's an area right here, late August, early September, that was really respected. So keep an eye on that level, and then of course that measured move of about 350 points. And then we've got the Russell, which is just channeling lower here. It's really struggling. It's created 3 lower highs here on bounces. We've also got lower lows confirming each one of those, and so this index is working its way lower as well. And this is the more speculative small cap index. This is the one that most money flees into the quickest and flows out of the fastest. And right now this thing is really working its way lower and not really making much progress to the upside. And then you've got the VIX, which is an index that I don't bring up very often here. This is the volatility index, and it's really the fear gauge. And I don't pay much attention to a low VIX. I do pay attention to an elevated VIX. We start getting above 30 and especially above 40. Then we can get some indications that now fear is really kicking in and maybe the market's a little closer to some type of a correction bottom. And we don't always get up there. Case in point, we got up to 27 back at the June low. So we didn't, we approached that 30 area, but we didn't quite get there. So now we've got the VIX coming off this low of about 13.5, and it's now starting to turn higher here. And we've seen this multi-week downtrend line get crossed on Friday as this thing marked a new multi-week high closing above 17. Now that's not an elevated VIX, but it is a rising VIX. We need to pay close attention to that. That points to the presence of some fear starting to kick in. So keep a close eye on that as well. So as you head toward the week ahead, do your work. Be patient out there. If you don't see the setups that you like, stay on the sidelines. If you're looking for some other ideas, check us out at thestockbandit.com. We'd love to have the opportunity to trade with you. Thanks for joining me for this video. I will have more for you soon, but in the meantime, trade like a bandit.